Hi there, Frank here for premium members for the trading day of February the 19th, 2025, a Wednesday. Coming to you from Europe around 6 a.m. here, local time, getting ready for the North American session. And just a few words here to kick off this review here today, and perhaps a bit more blunt or honest or direct as usual, but I received an email or two. And my response to all of you guys is if you're not making money on this in this environment, it's because I can think of two things: lack of capital, which I can do not much about, or because you're not listening to me, and I can do not much about that either. So some people get bogged down on small charts. I tell people stay on the 4-hour chart. These markets are inching up. The only reason we look at smaller charts, smaller than 4-hour charts, is to fine-tune our entry. Fine-tuning the entry means we might be interested in looking for a little pullback on the 15 or 60-minute chart, but we still trade the 4-hour chart in the context of the daily structure. And sometimes we do zoom out and we look at the weekly because we don't want to go against a big tsunami approaching. So I don't think this concept is very difficult, but if you look at it, and I know it goes against some of the popular stuff that is available out there, and I've been urging people to avoid that kind of stuff and just do what we do here. We are profitable, our setup and method and approach to the market is profitable, and one important ingredient of this is not to get bogged down on every little sand on the beach. Don't get lost in the details. The details are mostly random. That's where professionals take the amateurs' money. Stay above that noise and just look out. Just stay on the 4-hour chart, which is probably a bit too big for the intraday back and forth that is going on. And look at these bottom tails, scary bottom tails on the intraday chart. But if you stay on the 4-hour chart, then you're not concerned. Now, of course, a little mathematics is in order because we do need to calculate our risk. If you trade the 4-hour chart, obviously that requires a certain amount of stop, 3 ATRs for us, generally. And the execution can happen semi-automated fashion with ProSTR or totally automated with BT, which is just fine. If you don't want to be bothered by making decisions, then just use BT, and BT will just do the job like a well-programmed hound dog that never makes a mistake. So here is the ES, a little bit of back and forth intraday, but that's basically just a bottom tail on the 4-hour chart and does not change one bit in our plans, which is to hit the previous high, and we expect a breakout above that level soon. Let's look at the NQ to see if there's anything that would contradict that idea. You can see that the NQ has already broken out. Well, we said that days and days ago. Of course, we do not know which day it will break out. So it could have been 2 days ago. It could have been in 2 days. It is happening as we look at it. And again, here is the breakout area on the 4-hour chart about a week ago. All this information was on the chart. Here is the hot zone, the bullish hot zone. We also warned you not to ignore the bearish setup here. So everything you need to succeed is, believe it or not, is right in front of you. Here is the YM, which is a little bit lagging, luckily, because if you're not in a position yet, you can consider that for the upcoming days, including today. Look at this beautiful bottom tail. Beautiful bottom tail. What does that mean? The market has probed the stops. That's the job of the market. The market goes where there is a cluster of orders sitting there. A cluster of orders, naive orders, sell orders, were sitting there most likely, and the market naturally went back there and just stampeded them all over. That's what the market does. Now, don't be one of those guys. And this bottom tail right now after the fact just indicates that our assumption was correct because price didn't spend any unnecessary time down there. As soon as the job was done, as soon as everybody was stopped out who was sitting there, somewhat naively again, when the job was done, price bounced back. And who bought those contracts? The bulls. That's it. Now, if you don't want to be among those stampeded over, then just keep your stop away from that area. And look at this. This is the 3 ATR stop. Whichever way you look at it is usually outside of the area of the danger zone. That's a little bit farther away that the market tends to come back. Right now, it just penetrated the buffer zone with the bottom tail. Also, one more thing. Once this is done, this for today's session, this is absolutely crucial information. This is the best potentially, again, because nobody knows the future. We're talking probabilities here. But this is possibly and most probably the best time to go long. Why? Because the dirty job has just been done. It is unlikely that the market will produce another bottom tail like this. So most likely, the market, having done the job, will not come back here. If it does come back here, well, it's possible, but then that's a whole new ball game. And then we take a loser, we learn, and we analyze the situation. But this is a very unlikely scenario. The most likely scenario is that now everybody got killed down there, and now graciously the bulls will take this higher. If you want to join the party, the time to go long is now. And probably a break of this level, I couldn't think of a better area to regard as a trigger area to go long. This is how I see it. First target area, the previous pivot. Remember our important lesson: when the previous pivot, major pivot, is within our 1R, then we take full or partial profits at the previous pivot, which is the situation now. You can keep a runner to the 1R if you want, of course. If it's the other way around, if the 1R is inside the last major pivot, then of course we regard the 1R area as our target for a full removal, profit taking, or a partial. Okay, so this has been discussed so many times and getting a little boring to repeat myself always, but this is how it goes. And after a while, there's really not much new scientifically to this, apart from developing the mental attitude and the discipline and the grit, and of course be able to restrain ourselves and not get too greedy and just keep ourselves to the strict math and our risk calculations. And remember, as one great trader has said in the past, trading is like laying bricks. It's not sudden, huge profits. It's about steady little steps each and every day. Rather boring, but that's what it is. The rewards will not be boring. Okay, so if the process is boring, you're doing something right. Look at it that way. Develop your own process. This, what we do here in Premium, should provide a cement-like framework, a foundation, a reliable foundation to each of us to develop the little personalized, little detailed approach to the exact trading plan that we're going to pursue, which will be individual because our life and our circumstances for each of us are a little bit different. So nobody's going to do exactly what I'm saying here, but what I'm saying here should provide a sound foundation for any trader, technically motivated trader, to use this as a basis for an individual risk management plan and investment plan, which is what short-term trading is. All right, so enough of that rant. Let's keep going, and we're going to move on to the RTY. R2I, no different. Look at this bottom tail. Nice little hot zone here, moving out, potentially a very good area if you want to be more cautious and just look at the daily. There is still a little distance to the official trigger area, which would be the break of this level here around 2300. Not too far away, a couple of points, 20 points maybe. Or if you want to just go long after the open today in the day session, just keep the 4-hour chart or the daily chart as your trading time frame and you should be all right. Okay, let's move on to other markets. Precious metals. All right, gold is coming out nicely. Another example of how well our approach is working. This is the first pullback after the breakout, and gold is beautifully moving higher. We expect 3,000 to be tested again, and perhaps a consolidation around or just above 3,000, and it's unlikely that gold will stop here. Now, SI, as everybody knows, SI is a potentially a hot market here, the way I see it anyway. Rather quiet right now, but I think that's a quiet before the storm, because this top tail could have been the precursor of big things to come. And now we are moving out from this bull flag, hot zone 2 on the 4-hour chart, but also structurally, the weekly is 35. And then remember, there's a previous pivot around 50 from the good old days. All right, now one more hint here for advanced analysis. If you're interested, usually a top tail like this is a negative sign for a bullish move because it might mean a burnout, or the last guy has bought and everybody has bought and there's no more buyers. However, 1, 2, 3, potentially 3 green candles after a top tail like this, well, that's a very, very bullish sign. It means that this could be just a precursor and new bulls or the same bulls are buying more of the same thing because it got a little cheaper. Long story short, I do think that SI will be 35.50 soon and more also pretty soon. Okay, and then we have some agriculturals here. Also, I want to say one more thing about Bitcoin. Bitcoin has been quiet lately, but remember, Bitcoin traditionally has been correlated with the indexes, and Bitcoin is usually not the first one that moves. Usually the indexes move first, and then that is followed by Bitcoin. So if you are bullish on the indexes and you expect that the indexes will be higher up soon, then look at this level here on Bitcoin as a support area and do not short. Even think of shorting cryptos, but be bullish on cryptos. And depending on how you want to play this, wait for the first challenge of the Keltner channel, wait for the pullback, and then launch. You can launch good longs. If you don't want to wait, as always, you can use a smaller chart to go long right now if you want, because this is a bull flag. Just remember what we said 5 minutes ago. Even if you use the small chart for an entry, that's okay. You're still trading the 4-hour chart or the daily chart, so the trade should still look something like this. Something like this, and you can safely put your stop within this candle, because if the low of this candle breaks, there will be a lot of slippage which you may not be participating in. So much about Bitcoin. And last but not least, I have some good lessons here on agriculturals. Check this out. So let's start with wheat. Wheat is again, this is a good review in 60 seconds of our methodology. This is practically a 1R, I think you would agree, depending on where exactly put your stop. You see, with a little tighter stop, it would be 1R already. So this is a 1R trade. Job done. This is completed. This trade has finished. There's another one, soybeans, on which the setup is building, which means there's no trigger yet. So this is currently, we're waiting for a trigger. The setup is kind of ready, and we are waiting for the trigger. And then we won't hesitate to go long. And then we have corn, which is in progress, which is the trigger has occurred already, but the 1R has not been hit yet. I should remove this. There's no 1R yet. The trade is in progress. So again, to go one by one, soybeans, we are waiting for a trigger. On corn, we are already triggered into the trade, and we are managing a trade. This is in progress. And wheat is the third phase. We have done the first, we have done the second, and we have hit the target. So this trade is now completed. The 3 stages of our methodology in action. All right, again, if you didn't participate, or if you're not participating in this because you're not trading grains, or because you're deployed elsewhere, your capital is deployed elsewhere, that's perfectly fine. The point here is not whether you're in a trade or you're not in a trade. You can still be in a trade on a simulation account. That's perfectly fine. The purpose of all these videos is to teach you how to trade, and so to help you develop the confidence in this methodology. Okay, so this was a little longer, but I just felt like sharing this with you, and the rest is really up to you. Last year, our return was 34%. That's all I can say. We'll be back soon, and until then, mindful trading.